drawings. 20 objectives questions. Key definitions. Capital is owner's investment in the business. Drawings is owner's withdrawals for personal use. How to use this video. You listen carefully, pause the video, choose the correct answer, and continue to check. Question 1. Which of the following increases capital? Additional capital introduced. It increases capital when additional capital is introduced into the business. That's the correct answer. Question 2. Which of the following reduces capital? The correct answer is drawings. Drawings reduces capital. Drawings is when the owner takes away money from the business for his personal use. Question 3. Cash withdrawn by owner for personal use is called. The correct answer is drawings. Drawings are cash withdrawn by the owner for personal use. Question 4. Capital introduced in cash will. Capital introduced in cash will increase assets and increase capital. That's the correct answer. Question 5. Goods taken by owner for personal use are treated as. Drawings. Goods taken for personal use by the owner is treated as drawings. Question 6. Which account is debited when the owner withdraws cash? Drawings account is debited when the owner withdraws cash. Question 7. Drawings affect the accounting equation by reducing assets and reducing capital. That is the correct answer. Question 8. Owner introduces goods into the business. Capital will. The correct answer is capital will increase when the owner introduces goods into the business. Question 9. Which of the following is not capital? Loan from bank is not capital. Question 10. When drawings increases, capital will decrease. When drawing increases, capital will decrease. Question 11. Which of these is an example of capital? Cash introduced by owner. Cash introduced by owner. Question 12. Drawings are recorded to reduce owner's equity. Drawings are recorded to reduce owner's equity. Question 13. Additional capital affect assets by increasing them. Additional capital introduced will affect assets by increasing them. Question 14. Drawings of cash will cause assets to decrease. drawings of cash will cause assets to decrease. Question 15. Capital account normally has a. The correct answer is credit balance. Capital account normally has a credit balance. Question 16. Drawings account normally has a. The answer is debit balance. Drawings account normally has a debit balance. Question 17. Which transaction reduces owner's interest? Which transaction reduces owner's interest? Drawings reduces owner's interest. That is the correct answer. Question 18. Capital introduced by check will it increase bank balance? The correct answer is it will increase the bank balance. Question 19. Which item increase both assets and capital? Owner invests cash. When owner invests cash. The last question, question 20. Drawings of goods will reduce capital. The correct answer is drawings of goods will reduce capital. Quick summary. Capital increases owner's equity. Drawings reduces owner's equity. Drawings are not expenses. Subscribe to Drill with Philip, WAEC Accounting Practice. New videos every week. Thank you for watching. Watch the next video. Like, share, and subscribe.